Hello and welcome to Crux Investor. We caught up earlier today with Stephen Roman. He's the CEO of Global Atomic, one of the more advanced uranium juniors at the moment. Category of one, they like to describe themselves as being. They've raised $12.5 million recently. We talk about what they're going to be doing with it and also why they've taken on a fuel buyer. Sounds like they want to cozy up to some of those utility companies. We look to the future and timing of when they can get into production and his thoughts on some of the fun and games in the marketplace with uranium juniors buying pounds in the market. If you want our thoughts and opinions on the conversation, you should go to cruxinvestor.com/club where we discuss them. And you can also find detailed company reports and analysis there. We've got summaries of other interviews that we've done. In fact, all of our interviews, just to save you some time because we know you're busy. We've got commentaries from experts from around the world on a variety of companies and commodities, including our weekly uranium show. And if you want to join a thriving community of investors sharing their thoughts and ideas with each other in a nice, safe, friendly environment, free from trolling, judgment, and abuse, hope you think that sounds nice because it is. Go and join them at cruxinvestor.com/club. And we'd love your feedback too, so give us a like, we appreciate it. Leave your thoughts below, get back to everyone. And if you want to see precisely what we talked about today, do take a look in the description below. Stephen, how are you, sir?
Hey, Matthew, I'm great. Things are finally warming up here in Canada, and spring has arrived. So it's nice to get out of the 20 below zero weather. And now today it's actually supposed to be plus 20, if you can believe it.
Very nice.
So yeah, very nice.
Physically,
things are well.
Physically and financially, by the looks of the markets for uranium at the moment. You've had a nice run up. You happy?
You know what? I think finally some investors are starting to realize that the value of our company. Clearly in the past, people were valuing us on our zinc asset and our zinc cash flow. Finally, with a turn in the uranium market, it looks like there's some investors thinking that perhaps we have a good uranium project as well. So, I think if you look at our project and compare it with others and the value of a pound in the ground and how that's viewed with other companies, we are still undervalued. We're probably trading at, between $1 and $1.50 a pound in the ground right now, whereas a lot of companies with projects that are far less advanced than ours are in the $3 to $5 range. So I think there's a lot of upside here yet. And of course, as we move this project forward, get our feasibility done and start building, I think the value will just continue to increase.
It's interesting what you say there, and we'll get into the company proper in a second. So it was more sort of hello and how are you sort of part of the conversation. But whilst we're on it, I saw a Cormack report recently, which was, and Cormack and institutions like Morgan Stanley are starting to issue coverage in a serious way. And I get that maybe there's some of the analysts are new to this, but the Cormack guy was using $8 per pound in the ground. That's quite a chunky number compared to where you're at.
You mean $8 a pound in the ground?
Yeah.
Yeah, for which companies?
I think that report was specifically for was it Energy Fuels I was looking at specifically?
I'm not quite sure. I don't have. I know the Cormack report. They just came out and started picking up coverage on Global Atomic, so that's great news. They were involved in our recent financing as well. And of course, they had a whole range of uranium companies there. They had a chart in their report, and we were way down at the bottom with our valuation compared to others. And of course, the big guys, Kazatomprom, Cameco, they're way up there with, probably $10 a pound in the ground. But, the real junior developers are down at, 1 or 2. I think we're past that now, having reached to full permitting and completing our final engineering. So, we should move up on that scale.
Well, like 235 is not too shabby, really. We should talk about what you've been up to since we last spoke, which we will do in a second. But I just want to talk about some of the macro things which are going on out there. Get your view. You've been in the uranium game a long time. We've seen Denison, UEC, and Boss raise money to go and buy pounds, soak up pounds in the market. I'm not quite sure either whether it's an investment basis or in the hope of trying to get utilities to move a little bit quicker than they are. What's your take of it?
You know what? I guess the bottom line take is that their pounds are more expensive to produce than what they can buy them for right now in the market. They also want to leverage those pounds because, of course, they don't know when they'll be able to get into production. They think the uranium price is moving higher, so why not have a few pounds of inventory that they can use as an asset on a financing to build their mine. Us, on the other hand, the current price is double what our production cost is, so it makes absolutely no sense for Global Atomic to be buying pounds. We can produce them much cheaper with our own production. So, I just view this as something that a few companies are doing that feel that their purchases of pounds are going to help them in the future for financing.
So essentially, they're playing the arbitrage game, what they can buy it at today and what they might be able to sell it at in the near future.
Exactly.
I'm
interested
in what you say. So that's an arbitrage investment basis, or it gives people permission to have conversations with utilities earlier than they would. Or they don't believe they're going to get into production themselves anytime soon. And if they are, it's not going to be at a price that they're going to be able to sell to the market economically at. One of all of the above. Is that what we're saying?
Yeah, one or all of the above.
Right.
Exactly.
Right.
Exactly. Like I can't imagine, raising money from investors and then turning around and buying a whole bunch of pounds. I mean, we have a 250 million pound deposit right now with a very high grade and low operating costs. So for us, that would be a silly thing to do.
Because you think you will definitely get into production?
Oh, there's no doubt about it. There's no doubt about it. We're moving ahead. We've got field work going on now. We've got heavy machinery on our site digging pits and testing ground conditions for the locating of the plant, the tailings, the town site. All that's ongoing right now. We're doing geotech drilling to finalize our mine plan currently. And, the feasibility is on track to be completed by the end of Q3. So, this thing, we should be actually there moving dirt, building the town site and the mine infrastructure by Q1 of 2022.
So you've raised some money recently. A lot of uranium companies have raised money recently, and it seems quite easily. Was it easy?
Yes, it was definitely not a big struggle to raise some money in this market, which is great. Uranium finally seems to have turned the corner, and we were well oversold. Of course, the syndicate had a top of 10 million with an over allotment provision that bumped us up to 12.5. That was fully subscribed in the first day.
Okay.
So, it just provided us with additional capital on the balance sheet. There was a lot of, let's say, discussion on doing a lower price financing. We said, no, we're not interested in financing at a lower price. So, we thought $2 was a great price based on the fact that the previous one was at 60 cents. So all of our investors, I believe, that were in on the 60-cent round, they supported us on the $2 round. So that just shows the commitment to the company and, the fact that they really believe in this project.
Looking at the price that some of the Aussie companies have raised, that up to 25%, 12.5 down to 25% type discounts needed to kind of get it over the line there. So what were the terms of yours again?
It was a $2 unit with a warrant at $3, and we basically did it at about a 3 or 4% discount to what it was trading at. I think we were trading at 210 or 215 at the time, so a very small discount.
Okay, and so do you think that's like North America is more confident in the uranium story, or is it just the fact there aren't that many players and perhaps some of the Aussies were in a different position to you? I mean, why do you think there's that disparity in terms of the discounting component applied?
Well, that's a good question. I really think that people think that since we have a fully permitted project, the risk is much, much less on our project. And so they're willing to pay almost a no discount. So, that's what I would say. I mean, we've eliminated a lot of risk on this project.
Right. When we've spoken in the past, you talked about no real desire to go and raise capital. You thought you might be able to kind of muddle through, as it were. So why go and raise this amount of money? What are you going to do with it?
Well, first of all, I don't think I would have ever said that we'd muddle through it, because we do have a cash flowing asset. And we're one of the few junior developers that has a cash flowing asset. Zinc, by the way, is at $1.30 a pound right now, but we're running at capacity in Turkey. So no, we're not muddlers. But you know what? To strengthen the cash on our balance sheet, to allow us to start a couple of other programs at site, which includes all of this geotechnical work, the pitting with the excavators. We're going to be announcing some other projects on site here in the coming months. So, you know what, we just wanted to expedite the whole program and accelerate the development of the project.
So, but tell me more about what you're doing, because obviously Cominak is closing down, literally in the process of closing down over the next few weeks. It's shut and gone. There's a lot of infrastructure, there are roads, there's all sorts of infrastructure which you could take advantage of. Where are you in discussions with Orano?
Well, Orano, of course, we have that MOU that we signed with them to truck ore from DASA to their Sommer plant. So we're still in discussions with that. We've just finished a pilot plant study that we announced recently. It was a program that was started last summer, and we had very good results, much better than what we expected in our PEA document we released last May. So at the moment, Orano would like to also test some samples at their Sommer plant to make sure that, basically they can process it there. We don't see any issues, but, it's a matter of dotting the I's and crossing the T's. Obviously what we're doing right now is we're moving ahead to have a standalone project. So we view a potential shipment of ore as a value opportunity. We want to build a standalone operation with our own plant, and but we like to keep all of these options open to us.
Right.
So that is still in the works.
Okay. So how do you move from PEA last March through to production? You've got a bunch of studies you've got to work your way through. You've got enough capital to get through to where? Deliver a PFS, deliver a feasibility study?
Okay, so on the PFS side, the pre-feasibility study, what we've done between 2018 and then of course 2020 PEA, we did a PEA in 2018 as well. That took into account some different mining options, including open pitting. We've done a number of other trade-off studies between the May project and where we are today. So this is effectively is a PFS level. So we're moving right into a definitive feasibility study now, which should be done in Q3, by the end of Q3. And then, we have to put a project financing together and move into construction phase.
Right. So given the price of zinc and given you're running at full capacity in Turkey, when do you start having conversations about leveraging that annuity stream of cash, which you're going to, I assume soon to start being paid out on? And is that the way you're going to finance this project? The equity portion of this, the debt portion of this? I mean, how are you looking at it?
Well, we're looking at various options, Matt. So, obviously the cash flow from the zinc could help us leverage some sort of a financing so we can reduce any kind of equity dilution. The typical bankers are going to want 25 or 30% equity. We may be able to do that with quasi equity. We are in discussions with a number of groups now on financing the project. So, we have probably, I would say, over the next 3 months, we would have more clarity to the market how this is going to happen. But I can't really talk about all of the initiatives currently.
Okay. And I look at Turkey at the moment. Turkey's been sort of bit hit and miss politically with some of the decisions being made by Mr. Erdogan, most recently of which is removing their world banker. What's your take on this? Is it business as usual? Or is this just norm for working in Turkey? How do you view it?
Well, right now, of course, it hasn't affected our business at all. So, we're running very well there. Of course, all of our local costs are in Turkish lira. We get paid in US dollars because all of our concentrates are shipped out of Turkey to Europe. Obviously the Turkish lira has taken a hit, which, on the accounting, it shows as a foreign exchange loss, but effectively all of our revenue is in US dollars. So it's an accounting entry based on IFRS principles, but, we're making money at that project. We expect to have all the CapEx, effectively the money we spent on the new plant paid out this year.
Okay.
So then dividends will start flowing to the company. Currently, we get management fees and sales commissions every month. But in Turkey, so the way it works there is once a year you declare a dividend. The capital or the cash that you make accumulates during that year, and then you get it in one payment after an AGM.
Right.
So effectively, cash flow that would be free cash flow for us made in 2022 would be paid to us in April of 2023. So it's always 1 year in arrears.
Okay. You've recently signed a marketing agreement with FuelLink, which tells me
Yes.
You think that utilities are going to want to be talking to you soon, or you're going to want to be talking to them. So what is that right?
That's absolutely right.
Okay.
We are talking to utilities right now, and the utilities are interested in Global Atomic right now. So FuelLink, who is run by a fellow named Bahi Sabalingam, he is a very experienced uranium marketing man. He used to be with Trade Tech most recently, but his big experience comes with Rio Tinto. He worked with Rio Tinto for years, and he was selling up to 10 million pounds a year out of their Rossing operation. And he's very well plugged in. He knows all the utilities. We're developing a strategy currently, but discussions are underway with utilities as we speak.
So obviously you've got a plan for a kind of phase one and a phase two in terms of getting at a higher grade flank zone, getting the dollars flowing, and then that funding the kind of underground component or potentially the underground component further down. Do the conversations with the utilities have any bearing on those plans? I.e., if FuelLink can introduce you to and have conversations on your behalf, say these guys will get into production, I've got a high degree of confidence, and they'll have to take a view on that, or you'll have to hit certain hurdles or milestones along the way, what's the likelihood of them turning around and saying, well, we'd like you to be producing more? Can they put that influence to bear? Because you've started off small and you're going to build it up, right? But with long-term contracts, money gets a bit cheaper and you can do more. So what's the thinking? How do you have that conversation with yourselves internally?
Well, I think what the market needs to understand is, and investors, frankly, is that right now there's really Kazatomprom, Cameco, and Orano that have the bulk of the market. I think conversations that we've had with utilities to date indicate that they would like to see some new entrants into the market. So we also feel that if we can sign some offtake agreements with a number of utilities, obviously, just as you mentioned, you're going to get much better financing terms, and money will be more available because you'll obviously have sales right off the bat. So, we're not going to build the project unless we have sales. So right now it's a prime, I would say, incentive for us is to get out there and educate the buyers on the project and get some sales locked in.
Okay, you've been around the block. I said that at the start. You've been around the block. When you're looking at the uranium market now, and maybe you want to hark back to the last cycle, pre-Fukushima 2011, you saw a lot of new entrants coming into the marketplace like they are now. Do you feel that there's a lot of noise out there? Do you look at these uranium companies and go, yeah, you will all definitely get into production. Don't worry about it. If nuclear fuel bars, there's enough supply coming down the line. Or can you, as a CEO, look around and say, I know that there are companies there who are making a lot of noise, who will, one, either never get into production, or two, it'll be a long time before it comes. I mean, honestly, I speak to the gold guys and the lithium guys the same way, and you guys always know who is genuine and who's not. What are you seeing out there in the uranium space?
Well, there's, of course, projects that are reasonable and projects that are great and projects that are not so good. So right now, of course, a lot of uranium companies have moved up because the sentiment is better in the uranium space. But I would say realistically, maybe 25 or 30% of them are going to get into production at some point. I think that's, of course, dependent on the uranium price. And a lot of companies need a much higher price than we do because we have the grade and we have our permits. So, grade is very important. Cost to produce is very important. And of course, the permitting is very important. So right now, there's some good assets out there, but I think it'll be a long time before they get permitted. We've already passed that hurdle. And so, I don't like to pass any kind of disparaging remarks on anybody else out there in the market because I've had my share of poor projects in the past, and I know it's tough. And of course, you're waiting on better conditions and hoping that you make the grade, so to speak. So, I think that, as I said, 25 to 30% are probably viable. The rest probably not.
Don't you think it's time to go list on the NYSE?
Too early for that. Yeah, maybe once we're in production, we'll do that.
Okay, fair point. Stephen, as always, wonderful to catch up with you. Sounds like it's going gangbusters there. What's the thing we're looking at for this year? Obviously, you're talking about the PFS is really a feasibility level. So, what's the timing on all of this?
It's an FS. It's a DFS, Matthew, not a PFS.
I know you're skipping a stage. No, I know, but that's saying you're skipping a stage. I thought you said to me you.
No, we didn't skip a stage. We actually did a lot of those trade-offs that were effectively a PFS. So we eliminated all of the different scenarios that didn't work for us, and we've zeroed in on the final scenario, which is a high-grade underground mine at the flank zone. And of course, you mentioned before, could you scale this up? Yes, if the demand is there, we could definitely scale it up. We chose 1,000 tons per day and producing about 4.5 million pounds a year, because we felt as a new entrant to the market, it's the amount of uranium that we would be able to sell. Now that makes this an extremely viable and profitable project. But you know, if the demand is there for 6 million pounds a year or 8 million pounds a year, we can ramp this up to that level. So I think people need to understand that.
At the right price.
Yeah, no, well, even at today's price. I mean, we, as far as we're concerned, we don't need a higher price. We're moving ahead.
Okay, brilliant. Stephen, thank you so much. Stay in touch. Let us know how you get on, okay?
Thank you, Matthew. Good to speak to you. All the best.